Geopolitical tensions and artificial intelligence (AI) dominate start of World Economic Forum taking place in Davos. Oxfam Inequality report says 5% tax on the continent's super rich could generate an annual $11.9 billion. Plus, oil prices mixed in Tuesday trading amid economic concerns and Red Sea issues. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Let's bring you up to speed with business development. Every year, the World Economic Forum annual meeting brings together top decision makers from government, business, and civil society to address major global issues and priorities for the year ahead. This year, growing concern that heightened geopolitical tension that could damage an already shaky global economy has dominated the start of the annual gathering of the world's business and political elite in Davos, Switzerland. Meanwhile, a study of global business leaders showed UK chief executives embracing generative artificial intelligence more rapidly than their peers in other countries. Francis Emmanuel Macron, Ukraine's Volodymyr Zelensky, and the European Commission President Ursula von der Leyen are all scheduled to address the World Economic Forum between today and tomorrow. Business Express will bring you more details of the ongoing summit subsequently. Meanwhile, as the 2024 World Economic Forum opens Monday in Davos with the theme Rebuilding Trust, Oxfam Inequality report says Africa's richest 1% own nearly half of the continent's total financial wealth, and that a 5% tax on the continent's super rich could generate an annual $11.9 billion, which is nearly enough to pay for the 2023 humanitarian requirements for Eastern and Southern Africa. Oxfam, therefore, advocates a new era of better public action, including public services, corporate regulations, breaking monopolies, and enacting laws to check excess tax reliefs, particularly to the rich.
The tax incentives is 18.51% of our budget. There is no problem if it had a relationship on issues around employment, investment in the social sector, and then dealing with issues around poverty, fair wages. But on the contrary, that's not what we are seeing.
Over 5 trillion naira was given as tax haven. This is unacceptable.
As long as corruption will continue to strive in this country, as long as government will not block the leakages, we will not end the poverty which is artificially created.
And as a consumer price index, Nigeria's annual inflation rises again to 28.92% in December 2023 amid rising food prices. A report from the National Bureau of Statistics shows that it is the highest since January 2003. The consumer price index report shows that prices rose to 28.92% in December compared with 28.20% in November. Food inflation, which constitutes 50% of the inflation rate, rose to 33.93% in December from 32.84% in November. The rise in food inflation on a year-on-year basis was caused by increases in prices of oil and fat, bread and cereals, potatoes, yam and other tubers, fish, fruit, meat, vegetables, milk, cheese and eggs. Now to our discussion segment, Nigeria's inflation of 28.92% in December 2023 marks the 11th consecutive rise from February 2024, the highest since 2003. Looking at the movement, the December 2023 headline inflation rate showed an increase of 0.72 percent points when compared to the November 2023 headline inflation rate. On a year-on-year basis, the headline inflation rate was 7.58% points higher compared to the rate recorded in December 2022, which was 21.34%. Economists had projected that December's rate will exceed November's high of 28.20%. What are they saying about inflation in this year, 2024? Our guest is Johnson Chukwu, an economist who is the MD, CEO of Cowrie Assets, and he joins us from Lagos. Hello, Mr. Chukwu. Happy New Year to you.
Happy New Year. Thank you for having me. Good morning.
Okay. Well, let's delve into it. The year 2024 started with inflation of 21.82% in January and ended the year at 28.92% in December, almost 30%. How did we get here?
Well, you have to look at what happened in the outgone year, that's 2023. A couple of factors prepared the inflation rate of 28.92% we saw as at December. One factor was the deregulation of the oil and gas sector, the petroleum industry sector, where we saw a significant increase in fuel pump price. Of course, you know, fuel pump price was between 198 naira and 200 naira per liter. Then we're now talking about 630, over 600 naira per liter in so many locations. So that had a direct impact on transport costs, had a direct impact on food prices, because you need to fuel the trucks that will bring the fuel from where the food when they are produced to where they are consumed. Another factor was the devaluation of the currency. Cast your mind back to where the exchange rate was prior to the harmonization of the exchange rate. At the parallel market rate, it was in the region of 750 naira or thereabout. At the official rate, it was between 430 and 460. Today, we're talking about official rate that had touched over 1,000 naira, and we're talking about a parallel market that is over 1,200 naira. So those are factors that, among which contributed to inflationary pressures. Another factor was the issues around the security major food belts of the country, particularly the North Central, North West, and North East. Because of a heightened level of insecurity, many of the farmers there were displaced and moved to IDP, internally displaced persons camps. And that reduced the volume of food production in the country. So three major, and then the fourth factor was the ways and means funding of the federal government by the central bank. If you cast your mind back last year, the National Assembly approved a securitization of about 22.7 trillion naira, which was ways and means funding for the previous years of the immediate past government. But last year, by December, the president sent a bill to the National Assembly to securitize under 7.3 trillion naira, which meant that last year alone, actual federal government budget deficit that was funded by central bank was in the region of 7.3 trillion naira. And that is excess liquidity coming into the economy that was not backed by productive activities. So these four factors are the factors that drove inflation to where it was at the end of last year.
Okay, can we possibly count on the central bank's monetary policy rate to address these issues?
You know, the concept of use of monetary policy tools, particularly MPR, monetary policy rates, to bring down inflation is based on the fact that inflation is driven by credit expansion. That is, a lot of banks are giving out money to people, and that leads to a liquidity surplus. But the current inflationary pressure is not driven by credit expansion. I mentioned four of the major factor driving inflation. And none of them dimension create expansion. So, and that's why the use of monetary policy rates or monetary policy tools are not effective in fighting inflation, because inflation today is driven by structural deficiencies in the economy. Issue of exchange rate pass-through cannot be fought with monetary policy rates, increasing interest rates, and therefore sucking up liquidity from the system. Issue of food production will not be fought with monetary policy rates. Issue of the higher cost of landing, higher cost of fuel, which in the immediate past month in December, the fuel and water and electricity increased by about 4.84%, almost 5% in the month of, for the month of month. I mean year on year for the month of December. That cannot be fought with monetary policy rate. The increase in food and non-alcoholic beverages of about 15% we saw in year on year to December cannot be fought with monetary policy tools. Even the injection of liquidity coming from the central bank to the federal government by ways and means can also not be effectively fought with monetary policy. Yeah, if you do that, you're going to have a very high rate of interest rate, which will completely constrain productive activities. So the Monetary Policy Committee or the monetary authorities are highly constrained by the structural revision of the economy in terms of using monetary policy tools to fight inflation.
Okay, food inflation, which constitutes 50% of the inflation rate, rose to 33.93%. Is it any surprising that food inflation was the highest push to overall figures?
No, it wasn't surprising to me. Like I did mention, the major root cause of the high food prices today is because we are not producing as much quantity of food that we used to produce. Remember that if you look at those food items that moved up, whose prices moved up, cereals, tubers, fish, and stuff like that, even meat, they are all locally produced items. I mean, we don't import any tuber here. Potato is produced here, cassava is produced here, yam is produced here. So some of the cereals we also consume, apart from wheat, are all locally produced. So if there's any food component that actually is imported, is coming from wheat products, which includes bread. But the 90% of what Nigerians consume are produced locally. So if you're having food increase in food prices and it's not coming from because you don't consume so much of imported food, then the problem is coming from local production. Not that our population has skyrocketed beyond what it was last year. Principally because if you go to the major food beds, the states like all the northwest states, Zamfara, Katsina, they are major food beds of the country. They're not, people are displaced. I'm sure you are hearing on a daily basis people being kidnapped in those locations. If you come to North Central, Plateau, Benue, you are also having the same issues. If you go to the Northeast, you have the likes of Borno State, Adamawa State, and all the rest. You have issues. So if people are not able to produce the basic food items that we produce here, then you are going to deal with supply less than demand. And when supply is less than demand, it reflects in prices.
Okay. The average global inflation rate is 11.1%. How are countries in Africa performing against this average?
Well, if you look at countries in Africa, countries in North Africa are seeing moderation in inflation rate because food prices have actually dropped globally. And remember that in North African countries, their major food consumption is cereal-related, wheat-related food. They are largely dependent on cereals as their major source of food items or food on their tables. So we're seeing a moderation in North Africa. Even in countries like Ghana, we're also seeing moderation. Any country in Africa that is not dealing with insecurity should have a moderation, because even the pass-through effect of the crisis we had in Russia as a result of wheat embargo that came about at the start of the Russian-Ukraine war, the Western countries have been able to sidestep it, and we're seeing shipment of wheat to many parts of the world. You see in countries like Brazil, we see moderation in inflation. In Western countries, Europe, UK, US, we are seeing a drastic reduction in food prices. What has remained obstinate is core inflation, which has to do with energy cost. But for us in Nigeria and a few countries that have some supply bottleneck when it comes to food production, we're still seeing an obstinate level of food inflation.
Okay, you said monetary policy rate alone cannot address this issue. What do you think we need? Is it the fiscal authority to come in with its own policy direction or things like that?
Well, I mentioned two things we need from the fiscal authority. One is to fight to address the issue of insecurity so that people that are in farming zones can go back and produce and go back to their farms and farm without being afraid they could be kidnapped. I understand in states like Zamfara State, people and Katsina people pay ransom to go to their farms. They need to go back to their farms, and that is basically at the duty of the fiscal authority to address that. The second issue the fiscal authority needs to do is to reduce or possibly stop the use of ways and means to fund budget deficit. That has huge inflationary impact. The other factors are things that we will have to, once we improve productive activities, they will moderate. Issues around the pass-through effect on exchange rate. If we improve food production and we have higher level of foreign exchange earnings, exchange rate will stabilize and the impact of depreciation of the local currency will moderate. So these are factors that only the fiscal authority can deal with. Then when they do that, it becomes easy to use monetary policy to take out whatever liquidity surplus that comes into the economy.
Now, Mr. Chukwu, briefly, before I let you go, let's have your projection. Do you see inflation dropping at least slightly at the end of this January? And how do you see the rest of the year?
I think it would be too optimistic to expect inflation to drop at the end of January. What I think is that by the time we move towards the end of this year, we should begin to see a moderation in inflation, not because the prices are not increasing, but the magnitude of those increases will no longer be as they were in the immediate past year. That's what we call base effect, because you're measuring inflation year on year. So this year's, for instance, the price level in December, current price level in December, if for instance a bag of rice in December was 60,000 naira, it becomes the base to measure inflation on rice in December this year. So if price move from 60 naira to 66 naira in December next year, it simply means price of rice has only increased by 10%. Remember, you are measuring year on year. You don't recognize the fact that it had actually previously increased. So the base effect will begin to reflect as we move towards the period where you have higher rate of inflation, because the magnitude of subsequent increases may not be at the same level of last year's increases.
Okay. Thank you very much, Mr. Johnson Chukwu. It's a pleasure, and in fact, it's been a pleasure having you on the program. Now moving on, Ministry of Finance Incorporated says it has restructured and resumed full control of government shares in 11 discussed in a statement by the agency. A statement by the agency says it has formally taken over the ownership, control and management of federal government's 40% equity holding in the 11 privatized successor electricity distribution companies of the defunct Power Holding Company of Nigeria. Managing Director and Chief Executive of the agency, Armstrong Takan, says the agency was also taking significant steps to ensure the assets deliver full value to the country while looking forward to collaborating with key stakeholders towards making a tangible impact in contributing to a thriving, resilient and growing Nigeria. The Nigerian National Petroleum Company Limited is seeking to transfer the operations of the Port Harcourt refinery to private entities. This was disclosed in an expression of interest notice issued by the NNPCL on its website and shared on its X page on Monday. The Port Harcourt refinery, which is in Rivers State, is one of the 4 refineries owned by the NNPCL. The refinery has a refining capacity of 210,000 barrels per day, but has been bedeviled by years of neglect and operational challenges. The contract for the operation of the refinery will cover a wide range of refinery business processes, including crude oil receipt and storage, refining product storage and distribution, as well as maintenance. Let's head to energy market where oil prices were mixed on Tuesday after losses in the previous session as market weighed both economic concerns against weather-related U.S. demand-supply issues and continued tensions in the Middle East that led to more tanker diversions. Brent crude futures rose 5 cents or about 0.06% to $78.20 a barrel at earlier. The contract had earlier settled 14 cents lower on Monday. U.S. West Texas Intermediate crude was down 20 cents or 0.28% at $72.48 per barrel after U.S. public holiday on Monday. And gold prices were subdued on Tuesday as the dollar Treasury yield rose while traders waited to hear from a slew of U.S. Federal Reserve speakers this week for more clarity on the central bank's rate cut prospects. A look at the global commodity market. Investors' confidence continued to drive the bullish posture in the NGX capital market as the week began in green. The all-share index climbed by 1.92% on Monday to close at 4,640.89 basis points. A total of 807 million shares valued at 11.03 billion naira were traded in 13,647 deals. Equity capitalization increased to 46.3 trillion naira. Transcorp, ICO Insurance and Wemo Bank dominated the activity chart at the end of the session. Next is global stock market outlook with Nneka Oko. Hello, Nneka.
Hello, Musa. Stocks slumped this Tuesday as investors look ahead to U.S. December retail sales data to be released Wednesday, which could fuel recessionary fears and concerns about economic growth if consumer spending shows signs of cooling down. Hong Kong led declines in Asia-Pacific markets, with Japanese stocks also halting their record-breaking rally that was seeing benchmark indices hit multi-decade highs. Hong Kong Hang Seng Index shed 1.89%. The Shanghai Composite dropped 0.07%, and the Nikkei 225 in Japan is down by 0.71%. Stock futures in the U.S. were in red in early morning trades as Wall Street awaits further data and bank earnings that will provide a better glimpse into the state of the American consumer. Futures tied to the Dow Jones Industrial Average is down by 0.38%. S&P 500 depreciated by 0.42%, and the Nasdaq Composite depreciated 0.57%. And in Europe, stocks are heading for a lower open Tuesday as markets continue to focus on news and comments from the World Economic Forum in Davos, Switzerland. The UK's FTSE 100 is expected to open 18 points down, the DAX 76% down, and the CAC 27% down. Then African markets also opened lower this Tuesday. Tracking global sentiment, already the benchmark index in South Africa is down by 0.6%. Namibia's overall index is also in red, while figures are still being expected from other stocks. And that's global market update. It's back to Musa.
Thank you, Nneka. Well, the naira appreciated against the US dollar to 838 naira 95 kobo to a dollar in the official market on Monday. Let's see other major currencies. Well, let's do this again on Wednesday by 3 p.m. Thanks for watching Business Express. Enjoy the rest of your day.